Hello, my name is Keone. Welcome to Keone Crypto Law. So this channel is a place I share what I learn in trading, and hopefully you can learn something from it. So today we're going to talk about the V-shape and how to trade the V-shape pattern. So about 2 videos ago, I was talking about how to catch the reversal. And the V-shape pattern is one of the way to catch the reversal pattern. On that reversal video, I was talking about what's the criteria for the valid V-shape pattern. And so I'm going to list the requirement on here, and so you can have a quick review. But if you want to know more detail, just go back to the video after this video, and you can just learn more about what make a V-shape pattern valid. In that video, I only talk about one way to trade it. So this today, I'm going to kind of mention the second way you can take advantage for this pattern. So before we get into that, I kind of want to dive in a little bit deeper on the logic behind the V-shape, why the V-shape happened, and the logic behind it. So one of the criteria for V-shape happen is the sudden move of the market. So the price need to raise really fast or fall really fast. So in one of the video, we talk about the premium price and the discount price. The reason why people think something is expensive is because the sudden move. The people will start to have the anchor on what's expensive and what's cheap. So let me just give you an example on this. So let's say if one bag of Fuji apple is $5. The Fuji apple jumped from $5 to $10. So when the apple doubling the price, the buyer will think, oh, that's too expensive. I'm not going to spend $10 for a bag of apple. On the other side, if you are the seller for the Fuji apple, then you're going to just sell as much as you can. So when the market get to that $10 price, buyer and seller have the same understanding. This price is too expensive. So they will either stop buying or they will just selling a lot more, and so that will cause the price to come down. So after the market fall back to the $5 starting price, and the market will just reassess on what's the market going to go next. They're going to keep going lower, or they're going to find support on the $5 mark and go higher on that way. So you will oftentimes to see just the market come back to that V shape. It will get into a consolidation before it go up or down. Even though the V shape pattern is a reversal pattern, it doesn't mean it will reverse every time you see the sudden move. So on the side note, just because the crypto market is 24/7, not like a stock market, just when there's a sudden move, then usually you will create a gap. And so that means just nobody is traded during that gap. And so every time we see the sudden move, in our mind, we have to say, okay, the price is moved too much too fast, and so there must be not a lot of people participate in that area. So just in your mind, you can say, oh, that's a gap. So with that explanation, hopefully you have a much better understanding on why the V shape happened. So right now, let's talk about how we can use V shape to trade. So the first one is that we talked about last time is used as a reversal pattern, and the second is to trade during the V, before the V is even happen. So we're going to talk about a little bit more pros and cons on both. Maybe at the end you can let me know which one do you like better. The first way is the reversal we talked about last time. So if you want to trade reversal, we don't want to try to catch the low. So we have to wait for the market to break the previous high and maybe retrace to confirm this is the valid V-shape pattern. And for this example, you can see there's a V-shape here, and so after the market come back to the original price, the market get into that consolidation. Then so when the market break that consolidation and retest back to the consolidation area, consolidate a while, then just market just shoot up. So this example is even though the V-shape got filled, but one of the criteria didn't really match. The market have to come down as equally fast, or the V-shape is not going to qualify. So in this one, as you can see, just we have the sudden move up, But when the market go down, it's not a sudden move back down to fill the gap. So they have that lower high and lower low and just stare down to back to the original price. That just shows just like even though the price is that high, there's still people think the market can go even higher. So that's why the market doesn't have the agreement on the market that the current price is too high, because some people are still trying to buy up. And so the candlestick will show us some detail on that. So as you can see, just like when the market get into that consolidation, even though it break, but when it come back test that consolidation, it didn't really hold and retrace back and break again and go even higher. So this is a good example on the failed V-shape pattern if you're going to trade the reversal. But if you trade the V-shape itself, and you're going to catch these pretty good. And so it just kind of depends on like what you're looking at, and do you have that risk control on just like to know, okay, because the market just have the sudden move up, then I'm not really sure the market is going to go even higher or not. And so you just have to set your stop loss on the previous high. So that way, just like even though the market decides go even higher, then you are protected. So the pros for this reversal trading, if all the criteria is met, and there's a high probability the market is going to go higher or go lower depending on which way you are looking at. The con is the reversal is not happen that often, so you will have a last opportunity to trade because you have to meet a lot more criteria. So the second way is to catch the V, just like after the market which is like go all the way down, then you will just trade that V up to back to the original price. So the pro for to trade the V happen more often because every time there's a sudden move, and most likely there's going to have that V shape recover that move before it go anywhere else. And the con is pretty obvious because you catch the low, you have to face the reality. Low might just go lower. So when you're trading the V shape, it's really important you have to wait for the market kind of slow down before you participate in the market. So which one do you like? Do you like more like a confirmation and for the market to settle down and make sure also it's the direction the market going to go up or down, and you trade the reversal of the trade? Or you like to trade more and to catch that V shape, to have a plan to trade, and doesn't matter if it's the reversal or the V shape. And as long as you have a good understanding why this is happening, the logic behind it, and you can trade either or, and it will be equally risky because there's some criteria you have to meet. And so if you are interested, I can talk a little bit more, make a plan for your trade. So if you want to watch the video like that, and you can just comment down below or give me a like and let me know this is what you want to see. So I don't know if you noticed, I got a little pegboard on my desk. Just like I have a 2-screen set up for my trading and working desk, but just like there's a lot of little stuff. It's like my key, and some pen, and some my headphones on the table. It's just really messy. Just I don't really like it. So I finally got a pegboard from IKEA, and so I really like it. It's like I'm not. It's not an ad or anything. I just kind of want to share. Just like if you have a messy desk, you can consider this pegboard. Just like easy to install. I don't want to make a hole on the wall, so I'm not hanging on the wall. So they have a clamp, so you can clamp the pegboard on the desk. So maybe you can tell me about your trading desk setup. I'm using Apple. And so I have a Mac Mini and the MacBook Air, and so 2 screens. This is more than enough screen for me when I do my trading. So I don't know what you think on that. Just maybe some people say, oh, I need 8 screens. I mean, for me that's overkill. It's just like if you happy with 1 screen, that's good. And for me, I think minimum is you need 2 screens, just 1 for the chart and 1 for the trading journal. Just like to record your trade. And if you like this kind of chat at the end, just let me know. My subscription and the views going up, and so hopefully we can keep that going, and hopefully we can go somewhere with this channel. Okay, so until next time, I will talk to you later. Bye.